Hi, good morning, everyone. Thanks for joining us for our weekly morning call. For our stock counter updates, today we have an initiation on block, followed by the recent US first quarter 2023 strategy and our Singapore banking monthly, as well as an update on the US bank's fourth quarter 22 results and the Fed notes points recently, as well as followed by our technical analysis. So without further ado, I'll hand it over to Ambrish.
Thank you, Glenn, and good morning, everyone. So last week, last week we initiated coverage on Block, and so Block, it basically is a financial services and digital payments company. The company's two business segments are Cash App, which is more of a banking application, and Square, which offers point of sale solutions to merchants. In FY21, Square contributed about 29% of total revenue, while Cash App contributed about 70%, and majority of its revenues comes from the US. In terms of its profits and bottom line, in FY21, the company generated about 166 million PATMI, and adjusting for stock-based compensation and amortization of purchased intangibles, it reported an adjusted PATMI of about $898 million US. The company also reported a free cash flow of about 714 million in FY21, and despite the higher top line growth rate, the company reports low margins, and it was mainly because of ongoing growth investments in product innovations. Next slide, please. So moving to our investment highlights. First of all, Square ecosystem, it simplifies commerce. So Square segment, it basically helps merchants. It mainly focuses on micro merchants, and it helps them to grow their business operations across online and offline locations. It provides its product ranges from point of sale solutions like hardware, software, which mainly includes a Square stand, as well as card readers to accept payments. It also provides inventory management, loans to merchants, as well as services like scheduling and payroll for employees. So Square segment, it mainly helps to consolidate different vendors for merchants rather than having relationships with various multiple vendors. So in FY21, the company's gross payment volume, it increased by about 49% year on year to 168 billion US dollars. And the significant surge was mainly because during pandemic in FY20, majority of retail stores, they were shut down. So going forward for Square segment, we expect a revenue growth of about 24% CAGR. And it should be driven by resurgence of in-person activities as well as shift to cashless payments. Secondly, Cash App growth excluding Bitcoin is expected to remain strong. So Cash App, it's basically, it was introduced as a peer-to-peer payment app. However, it has now transitioned to a more robust platform, which includes banking services like a debit card, direct deposit, as well as its users, they can invest into stock and Bitcoin investments. So as of September 2022, Cash App reported about 50 million monthly active users, and it primarily serves the underbanked communities. So we expect Cash App growth, excluding Bitcoin, growth of about 37% CAGR, and it's mainly driven by number of users and strong adoption of its core services like instant deposit and cash card. Next slide, please. So moving to a third highlight. So basically, a Bitcoin bet backfired for a Block. In FY 2022, Bitcoin revenue we expect to drop by about 29%, mainly because of weak consumer demand for Bitcoin and overall crash in cryptocurrency prices. And this is significant mainly because it is expected to pull down the overall group's revenue. Additionally, Blockit is not consistently profitable, and we expect a net loss of about 500 million in FY 2022 due to the ongoing growth investments. So moving on to the risks, first of all, any negative sentiment with respect to macroeconomic environment like high inflation, it could reduce consumer spending, and as a result, it would impact the company's top line, mainly because there would be a lower transaction volume on its platform. Secondly, it faces significant competition in the in peer-to-peer payment market. It faces competition from PayPal as well as Apple Pay. Also, the company acquired a buy now pay later company, Australian company called Afterpay in 2022 for about 29 billion. So it faces a direct competition from Affirm. So, and lastly, the company, it is also exposed to Bitcoin as it is Bitcoin is a highly volatile and risky asset. So the company has also directly invested about 220 million in Bitcoin. So moving on to a valuation, next slide, please. We have initiated the coverage with a neutral rating and a target price of 70. It is mainly it is based on a DCF valuation using a 7.1% weighted average cost of capital and 4% terminal growth rate. So that's all for Block. I would now like to pass on to Max to cover our US strategy and stock picks.
Yeah. Thanks, Ambrish, and good morning, everyone. So we'll run through the recap of our US first quarter 2023 tech and strategy stock picks event that took place last Thursday. So to start off, we have 4 key trends that we are keeping our eyes on. Firstly is retail sales. So for retail sales, we are focusing on durable goods, and this includes your electronics, furniture, cars, and jewelry. And this strips out all those perishable goods such as groceries. So for the sales of durable goods, the sales are declining slightly after a huge surge during the pandemic, which is similar to the levels in 2007 and 2008 when the interest rate has peaked. So this means that people have started cutting back on buying, mainly because of the higher prices, so they have less disposable cash. So we feel that this trend is going to be headwinds for a lot of sectors, and this includes consumer electronics, which affect companies like Microsoft and Apple. Next slide. So the second sector we are looking at is digital advertising. So after a very strong pandemic-induced growth in 2021, digital advertising industry growth is expected to slow significantly to about 9% in 2022. And then we expect it to have a 10% growth thereafter for the next few years, but we don't think that there will be any more large growth of, like, let's say 15 to 20% and 20%. This is especially we think that the expectation is especially because companies are taking a more prudent stance on their spending, and that there's also high levels of internet penetrations both in developing and developed countries. So this means that a lot of people has gone online, and the addressable market for those who have not is significantly smaller now. So we think that this trend is going to force investors to reevaluate the growth expectations in digital ad companies like Meta, Snap, and Alphabet. Next slide. And next is streaming. So streaming owns around 30% of TV viewing time. So streaming continues to take share from other forms of traditional TV like cable and broadcast, and it still has more room to grow. So this trend should continue to provide tailwinds for companies operating in the streaming industry, such as Netflix, Disney, as well as YouTube, actually, because they are the main competitors in this segment. And the growth is mainly because more people are choosing the flexible options of streaming. Next. Yeah, so in terms of smartphone, then the last one is smartphone. The global smartphone shipment is expected to decline by 8% in 2022, mainly because of the the macro environment that decreased the demand. But this number is expected to recover and grow by 3% in 2023. So as always, the recovery will not be uniform across all markets, with those in the developing markets, emerging markets, sorry, where budget phones are more popular, is going to face more challenge because consumers there are more affected by the high inflation. Whereas those in the developed markets have somewhat offset the inflation pressures by offering more promotion activity, more attractive trade-in offers, as well as extending their financing plan. So part of the recovery expectation is because consumers who have pushed back the decision to buy the smartphones is expected to make their purchases in the following few quarters. And then for the growth momentum for the next few years is because of the increasing popularity of 5G rollout, as well as the increasing popularity of the foldable smartphones. And because of this, the accompanying this trend will be the increasing higher average selling price of phones because of the inclusion of foldable smartphones, as I mentioned just now, as well as consumers opting for more premium devices that can last them for longer periods of time. So that's all for the sector trends that we are looking at. So moving on to our recommendations for big tech. Next. So yeah, I'll start off with Apple. Firstly, for Apple is that we continue to believe that it is going to benefit from the higher average selling price for iPhones, mainly because the iPhone 14 Pro and Pro Max continue to sell much better than the basic iPhone 14 and 14 Plus. And then the selling price of iPhones has also significantly increased because Apple decided to remove the iPhone mini series from this year's lineup. So the higher ASP is going to contribute to revenue growth, and we are actually modeling iPhone revenue to grow at a 2-year CAGR of 6%. And this is after using the conservative assumption in terms of the amount of units shipped. Then secondly is that the supply concern because of the COVID disruptions towards last year has largely subdued, mainly because the main production plant in China is reportedly operating at 90% capacity. So the focus has shifted from Apple's being unable to supply consumers' demand to Apple's ability to recapture the sales that they may have lost during the holiday season. And with this regard, we think that Apple is capable of doing that because it enjoys a strong customer loyalty, where customers will not just cancel their plans of purchasing an iPhone just because they have to wait until the product becomes available again. But then we would like to note that the recent spike in COVID cases in China is going to pose uncertainties towards the supply chain, and mainly because the factories there needs healthy workers to maintain a supply level. So this means that if there's an outbreak occurring at a key production plant, employees may be unable to go to work because of their sickness, or other employees may decide to stay out of work altogether to minimize the risk of getting infected. So overall, with the smartphone demand expected to recover this year, we think that Apple is going to benefit from the higher average selling price of its products and grow its revenue. So overall, we maintain our buy rating on Apple with a target price of $190. Moving on to Amazon. So for Amazon, firstly, we think that its retail e-commerce dominance is going to continue, mainly because we don't see any significant changes in the e-commerce industry. And the same story also goes for AWS. There's no significant change in cloud computing industry as well. So AWS is going to continue to benefit from the cloud migration done by companies, especially in the current environment where companies across the board is cutting their costs. And cloud computing is actually one of the best ways to do so because it saves them the manpower costs as well as reduce the potential capex needed for servers upgrade. But the macro environment right now is posing short-term headwinds for both the retail and AWS business segments. For retail, it's because consumers are facing high inflation and thus they are spending less on discretionary spending. And as for AWS, since the companies are cutting their costs, they are opting for cheaper product tiers that are offered by Amazon. And Amazon actually noted that they are actively working with their clients to find the most cost-efficient solution that meet their needs. So we think that by doing this, Amazon is sacrificing short-term revenue growth for AWS, but it is building long-term relationship with its clients that can translate into long-term, that can translate to recurring revenue in the long run. So overall, we think that the main thesis for Amazon is still intact. It's just that they are heavily exposed to the macro environment that is heavily impacting the consumers now. And with that, we maintain our neutral rating on Amazon with a target price of $108. Next is Alphabet. So Alphabet remains the dominant power in digital advertising with more than 50% market share. So its revenue growth remained resilient with its third quarter 2022, which is the latest filing. Revenue grew 11% year-on-year in constant currency terms. And this is because of several reasons. Firstly, cloud revenue grew 38% year-on-year and remains Google's fastest growing segment. And revenue grew, and YouTube revenue doubled from FY19 to FY 2021, and it continues to see higher viewership. So YouTube Shorts sees around 1.5 billion users per month and recording around 30 billion views per day. And Alphabet is definitely trying to monetize YouTube, and it is also trying to focus quite heavily in the cloud. And because of the so in terms of the valuation, it is currently trading at 70 times forward PE, which is more than one standard deviation below its average of 21 times. And we think that the valuations remain quite attractive, as we expect the EPS to grow around 20% over the next few years, over the next 2 years, sorry. We continue to think that they are going to be, however, in terms of the negative, we continue to think that they are going to be affected by the digital advertising slowdown in FY 2022, and it is likely to continue for the most of this year as well, which we view as short term. Then in terms of margins, we expect their margins to continue to contract by around 7%, but we think that it should improve in FY 2023 as they cut back on their discretionary spending. But we still maintain our buy rating on Alphabet with target price of $124. Then moving on to Meta. For Meta, is the similar story as Google. We think as Alphabet, sorry, we think that the company is very underappreciated, with the stock currently trading like a value stock at historically low valuations of around 11 times for PE, which is well below its 10-year average of 32 times and also well below the Nasdaq average of 31 times. We expect Meta to generate around $15 billion of free cash flow in FY 2022, and we also expect this to increase to 27 billion in FY 2023. Meta currently has around $40 billion in cash and marketable securities on its balance sheet, and it doesn't have a high level of debt as its debt to equity ratio is at 0.1. However, in terms of the negativity, we expect the near-term uncertainty due to overall slowdown in digital advertising, especially amidst the current weak environment. Meta doesn't have any other significantly different products, so it is not as diverse as Alphabet, which means that Meta is more reliant on digital advertising. And another thing is that Meta is also facing an overextension issue where they hired very aggressively during the pandemic. The company is also facing elevated expenditures surrounding the metaverse and platform changes, but we also expect this to turn around moving forward, especially with layoffs helping to reduce these costs. Because of all of this, we expect operating margin to drop from 40% in FY 2021 to our estimate of around 26% in FY 2022. But we believe that this should expand again in FY 2023 as they make their employee cuts. So overall, we maintain our accumulated rating on Meta at a target price of $113. So moving on to Netflix. For Netflix, it is still the market leader in streaming with 47% of market share, and its average revenue per membership is at least twice that of Disney Plus, and the viewing hours within the US is almost is about triple that of Disney Plus as well. So for Netflix, we continue to see strong pricing power. As you can see from the chart, they continue to grow their monthly average revenue per membership to around $12. And we expect the ARM to taper slightly due to the expansion into developing markets with lower ARM, as well as the newly introduced lower price ad plan. We also expect the FY 2022 revenue to growth to be in the high single digit, which looks bad because of the FX headwinds of around 7% due to the strengthening US dollars. However, we think that they are going to be the main beneficiary from the growing video on demand streaming industry, and their new ad-supported subscription tier should help to boost margins moving forward. We do expect the effect of this new tier to be marginal at the start because since they are testing their rollout, but we think that it's going to contribute quite significantly moving forward, especially as they leverage on digital advertising revenue, which is a high margin business, to kind of expand their margins right now. The main negative we see is that they continue to see revenue loss from password sharing, and the growth in developed regions like North America is stagnating. But this stagnation in growth is offset by the strong growth in other regions like APAC and Latin America. So overall, we maintain our buy rating on Netflix with a target price of $346 US dollars. With that, I would like to pass my time to Amrish to talk about Microsoft.
Thank you, Max. So for Microsoft, we believe that its two main growth drivers are intact. First of all, it's a cloud computing business, Azure. It has a market share of about 22% in the public cloud market, and we expect that it should continue to gain market share, mainly because of the digital transformation trends, as well as its integration capabilities with Office 365. There could be a moderation in growth rates in the near term, mainly because companies, they spend cautiously. Secondly, the demand for its productivity software, Office 365, it remains strong. And the key growth drivers in this segment are mainly the economic reopening up and rising need to manage tasks and workflows. And Microsoft has a 90% market share in the global productivity market. Lastly, in terms of negatives, the slowdown in PC market is expected to hit Windows revenue. And the slowdown, it's mainly because of a weak consumer demand for personal computers and high levels of inventory after the boom that was witnessed during the pandemic. So overall, we have a buy recommendation on Microsoft and a target price of $319. So moving on to our other tech recommendations. Next slide, please. For Airbnb, we expect a strong travel demand to continue. We expect Airbnb's revenue growth to grow by about 25% over the next 2 years, and mainly driven by a surge in its booking volumes. We expect a number of nights and experiences booked in FY22. It should surpass its pre-pandemic levels. That's 2019. And the surge in volumes, it's mainly because of recovery in urban and cross-border travels as the economies, they open up. Also, the long-term stays, that's 28 days or more, are resilient, mainly because of flexibility due to the remote work environment. Secondly, we expect Airbnb to report a maiden net profit in FY 2022. And the company's earnings, they should expand mainly because of growth in its booking volumes as well as high operating leverage. And lastly, travel spend, it's mainly discretionary, and because of high inflation or rising interest rates, it may impact travelers' plans and budgets, which could negatively impact Airbnb's top line performance. So overall, we have a buy recommendation on Airbnb, and with a target price of $128. This is mainly because of we believe that there is a strong demand for alternative accommodations, as well as Airbnb has a unique listings. It has about unique supply. It has about over 6 million listings on its platform. So that's all for Airbnb. I would now like to pass on to Max to discuss Property Guru.
Thanks, Amrish. So for Property Guru, we expect the company to continue to benefit from the strong Singapore property market, as the country has a strong supply pipeline over the next couple of years, especially in 2023, which is this year. So so the addition of more than 30,000 readily available units onto the market, as well as the rising rent and pricing indexes, are expected to increase market activity. which opens up more opportunity for property guru to capture. And then there's also the reopening of the borders in China, which we think that is going to further add to the demand for property in Southeast Asia, because Chinese nationals actually made up the largest foreign property buyers during the pre-pandemic times, and they were heavily missed when the COVID restrictions started to roll out 3 years ago. So we think that these two factors we think that these two factors is going to benefit property guru. However, during the last earnings call, the management guided that the cooling measures implemented by the local governments is going to reduce some of the market activity. But they do think that the effects of these cooling measures is going to be short term, and they actually took it as a positive signal that the governments are confident in the real estate market and are taking proactive actions to prevent it from overheating. So we maintain our accumulate rating on Property Guru with a target price of $5.30. So that's all for the US tech strategy and stock picks. Next slide. Yeah, and this is the list of all the companies that the US team is covering right now, and you can refer to them in our daily morning note or on our Stocks PNB website. So that's all for the US team, and I'd like to hand over my time to Glenn. Thank you.
Thanks, Max. So for me, I'll be covering the Singapore Banking Monthly. Okay, so for the first slide, we're looking at the Singapore interest rates. So the interest rates continued to increase in December, and the 3-month SORA was up 39 basis points month-on-month to 3.08%, while the 3-month SIBOR was up 23 basis points month-on-month to 4.24%. For the fourth quarter averages, the fourth quarter 3-month SORA average of 2.68% was 125 basis points higher than its third quarter average, and it has improved by 252 basis points year-on-year, while the fourth quarter 22 3-month SIBOR average of 3.96% was 149 basis points higher than its third quarter average of 2.47%, and is improved by 352 basis points year-on-year. Now, I'll also do a quick touch upon SGX, as their earnings results will be released soon. So in FY21 and FY22, their treasury income dipped, and this was mainly due to the low interest rate environment. However, we do expect a rebound in their treasury income in FY23 by at least 8%. And this is based on historical data. Looking at this chart here, we can see that the SGX's treasury income is lagging behind the Fed funds rate, as a majority of their collateral balances, which total 13.9 billion in FY22, are placed in fixed deposits with the tenure spread out. Hence, certain deposits have yet to mature and the interest rates have not been refreshed. However, nonetheless, moving into FY23, we should expect that the treasury income will recover or even exceed pre-pandemic levels as they get placed into higher interest FDs. So for some context, in FY20, SGX earned a yield of 98 basis points on collateral balances of 13.7 billion, resulting in treasury income of 135 million. And this was when the Fed fund rate peaked at 2.5%. And for FY22, treasury income was only 49 million, with an average yield on collateral of only 36 basis points. Now, moving on to the Singapore loans growth. The overall loans to Singapore residents rose by 0.67% year-on-year in November, and this was below our estimate of a mid-single-digit growth for 2022, as the rise in interest rates start to be more fully felt by the consumers. For business loans, it grew by 0.43% year-on-year, as the business loans dipped by 1.49% for the month. The loans to the building and construction segment, which is the single largest business segment, grew by 2.64% year-on-year, while the loans to the manufacturing segment grew 3.41% year-on-year in November. For the consumer loans, it was up 1.04% year-on-year to 313 billion, and this was aided by strong loan demand in the housing segment. The housing loans, which make up about 70% of consumer lending, grew 3.97% year-on-year. For the total deposits and balances, it grew by 6.36% year-on-year to 1,719 billion. And the CASA, or current account and savings account proportion, dipped slightly to 20.7%. And this is from 21.1% in October, as there was a continued move towards the fixed deposits due to the high interest rate environment. So for a quick point on Hong Kong's domestic loans growth, it declined by 3.02% year-on-year and 0.35% month-on-month in November. Now, moving on to the SGX statistics. For the preliminary SDAV for December, it rose 10% year-on-year to 920 million, as the market sentiment recovered slightly in the last month of 2022. The VIX averaged 21.8 in December, and this is down from 23.3 in the previous month. And the DDAV rose 8% year-on-year to 0.92 million in December, but it was down 15.6% month-on-month. For the top 5 equity index futures turnover, it saw a dip of 3.8% year-on-year in December to 13.4 million contracts. And this was mainly due to the lower trading volumes of its FTSE China A50 index futures and the Nikkei 225 index futures contracts. For the second half of 2022 figures, SDAV was down 8% year-on-year as market sentiment remained subdued due to the macroeconomic factors. However, the second half 2022 DDAV was up 10.8% year-on-year, and this was due to a continued rise in risk management activities, which drove the derivatives volume growth in FX and commodities, as the global markets responded to another round of rate hikes by major central banks, as well as China's recent reopening. As such, we maintain overweight on the banking sector and we remain positive on the banks. The bank dividend yields are attractive with upside surprises due to excess capital ratios. The stable economic conditions in Singapore and ASEAN, as well as rising interest rates, remain tailwinds for the banking sector. SGX is also another beneficiary of the higher interest rates, and we should expect their treasury income to recover. So moving on, I'll also be touching upon the recent US banks' fourth quarter 2022 results. So 4 major US banks recently released their results, namely JP Morgan, Bank of America, Citigroup, as well as Wells Fargo. So the results were rather mixed, and the main story is that the net interest income showed strong growth across the board, ranging from 23% to 48% year-on-year growth. However, the non-interest income took a hit, as you can see in the third row here, mainly due to a dip in the continued decline in the investment banking, with declines of more than 50% for all 4 banks. However, so this resulted in rather flat PATMI for both JP Morgan and Bank of America. JP Morgan mainly due to a boost in their trading income, which slightly offset their investment banking decline. And for Bank of America, it would be a slightly lower provisions change as compared to the other banks. However, for Citigroup and Wells Fargo, their PATMI declined quite significantly, and this was because the growth in their trading income could not offset the decline in investment banking, as well as a higher provisions change. So that's all I have for the US banks. I'll now hand it over to Sean.
Yep. Thanks, Glenn. I'll be going through some of the commentaries that were shared by the Fed last week. So basically, last week, a few commentaries shared by the Fed board are suggesting that in the upcoming meeting, they will still be gradually increasing the rates while constantly monitoring on incoming inflation data very carefully. This incoming data will allow them to assess the tightening, as the Fed is trying to achieve a softer landing that they are hoping for, while also not making the mistake of relaxing too early, which is what Jerome Powell have mentioned on many occasions, as well as in his speech last week. So within the Fed policymakers, Bostic was the most hawkish by stating that his base case is to have no rate cuts even till 2024. So overall, although we may be reaching the terminal rate whereby the interest rate peaks, and many Fed members are suggesting of a range of like 5 to 5.25 to be considered restrictive, we can be prepared that a high inflation environment will be here to stay for a period of time, and a cut in interest will be highly unlikely anytime soon. But on a more positive note, last week headline CPI for December 2022 fell by 0.1 month-on-month, while core CPI climbed 0.3%. This was within the market expectation, and this was the first decline in CPI since April 2020 when there was a COVID outbreak. So although the market is settling between 25 or 50 basis point hike in the next meeting, this set of positive data may seem to suggest a more optimistic outlook that a softer landing is perhaps feasible, and a 25 basis point hike is highly likely in the next meeting. But this is just one piece of the inflation puzzle, as there are many more components which they take into consideration. And this Wednesday, there will be a release of the PPI data. And if this data is positive, this would further bolster the certainty of a softer landing. That's all I have. And with that, I'd like to hand over my time to Zain to share on his technical analysis.
Thanks, Sean. Good morning, everyone. So now I'll be talking about the technical analysis portion. For Straits Times Index, last week we hit a high of about 3,340 points. Before we saw a rejection candle, and that indicated a resistance at the double resistance area of this orange trendline channel in the chart, as well as the blue downtrend channel as well. So the 3,310 to about 3,330 area remains a very stubborn resistance zone for STI to clear. So we are possible to see continuation of the consolidation that has been taking place since mid-November last year. With that, the immediate support is at about 3,210 to 3,250 area, which is the orange trend channel support, as well as the consolidation range support that has been holding the index since November last year. Next slide. For the S&P 500, was quite interesting, as we actually closed at this key downtrend resistance line on Friday. So this resistance line has been acting as a key resistance for the index since the S&P peaked in January last year. So if we could be looking at a potential breakout of this resistance line this week if we manage to clear 4,000 points, where the next immediate resistance will likely be at the 4,100 area, which was the high seen in December last year. For the immediate support, we're likely to see about 3,380 to about 3,930 area, which was the previous resistance of the consolidation triangle before we broke out. So that's all for the S&P 500. Moving on, I'll have the three stock counter updates. So the first one is Prime US REIT. So for this, we have a technical buy at 38 cents, the TP at 44.5 cents, the stop loss can be placed at 36 cents, and it last closed at 42 cents on Friday. So for Prime, there's actually a potential relief bounce in this downtrend to test the 44.5 cents price level. This is because we actually hit this downtrend channel trendline support, and the MACD has also started to turn positive again. So with that, we could reach this price level, which is a 50% Fibonacci retracement level when we use this swing high of 52.5 cents and a swing low of 36 cents as points of reference. Also, it was a previous swing low support. So if we do test this level again, it should become a short-term resistance for Prime for now. Just a side note, for Prime, we also have a fundamental buy call with target price of 88 cents. Next slide. So for the next counter will be Mapletree Logistics Trust. So for this, we have a technical buy at $1.63 with a take profit at $1.75. Stop loss can be placed at 160. As the stop loss closed at 160 on Friday, so this trade was invalidated. So actually, it was a potential follow through of the bullish momentum gathered since middle of October last year, should the price actually break out of this consolidation triangle. So actually, the MACD technical indicator was displaying signs of bullish momentum with a bullish crossover recently. So with that, the price could actually hit 175, which was confirmed with a previous swing high in September last year by taking the height of the consolidation triangle, which is 12 cents, projected onto the breakout point. So for now, looks like we are still consolidating in the triangle as you are still finding resistance at the 164, 165 level over there. Next slide. So for the last one will be Pinduoduo. So for this, there's a technical sell at $94.09. The take profit at $71.30. Stop loss can be placed at $104.30. The stop loss goes at $97 on Friday. So for Pinduoduo, there is a potential pullback in the price to retest this uptrend channel support and the previous neckline resistance at 71.30. In this uptrend, the price actually formed a bearish reversal evening star candlestick pattern on the 10th of January at the confluence of this uptrend channel resistance, as well as it actually hit a previous swing high of $95.58 in November 2021. Also, the MACD indicator is showing some signs of weak momentum, as it actually made a lower high while price made a higher high recently, which is signs of a bearish divergence. So with that, the price will actually pull back to 71.30 level in the near term, in the support zone of $66 to $75. Confluent with this uptrend channel support, as well as the previous neckline resistance where price actually broke out from after testing it multiple times. So with that, we can expect it to become a support in the future for Pinduoduo. So that's all for me for the TA section. I'll pass back the time to my colleagues.
Just to highlight that I think Paul and Terence are on a business trip and were unable to join us this week. So if you have any questions that you would like to ask them, do post it in our Poems Mobile Tree community group, and we will get back to you ASAP. So you can scan this QR code and join the community group, and you can post it there, your question there, and we will definitely get back to you on that on the site. Okay, I'll hand it over to the rest of my colleagues for the other questions.
Then I'll begin with the TA portion. So the first counter is Genting Singapore. So for Genting, we actually see that it has been in a very nice trend over here. So last week we broke the $1 level as well. So we are currently just sitting outside of this uptrend channel over here. And then we also hit the $1.02 previous level last time. So when we look back over in February 2019, this was the 101, 102 level was a level last time. So there could be some resistance over here for now, where if we do break, still continue to break up above this resistance, the next level could be around 105 to 109 over here, which was a previous price. There was a price gap over here in August 2018. So that could be the next target for Genting if we continue to break out. For the current support, if we do pull back within this uptrend channel, right, I think the immediate support could be around maybe 98 cents area, which was a horizontal level that we broke out of, as well as it will come back to this channel support over here. So 98 cents was over here. There was a horizontal swing high level generated in April 2019 over here. So this is the TA for Genting. Then I'll move on to Sam Marine. And for Sam Marine, currently looks like we might be seeing some sideways action, as we actually there was this downtrend that being formed, and we actually broke out of it of this 136 level. So we're at this one, just sitting at this 138 level, which was a key horizontal level over here where we broke out of, and then we kind of consolidated at this support before it broke down and recovered back over here. So for now, maybe the immediate support will be around 135 to 136, this level where we consolidated for a while before the breakout. Immediate resistance wise, I think if you look at using the Fibonacci retracement, right, from this 151 swing high to the swing low at 130, I think the next, you can expect some resistance at 141, which is a 50% retracement level. And then further resistance will likely be at 143, which is a 61.8% retracement level. Okay, so that's for Sam Marine. Let's see. Next one will be DBS. Okay, so DBS looks like last week we tested around near the $36 level again, but we continue to find resistance over here. So we tested it a few times, 3 times over here, we still find selling. So for now, we put back to about the 34, close to the $34.30 level, and just kind of sideways for now. So I think the immediate support would be this $34.30 level, which we currently supported for now because it was a level, horizontal level over here that we broke out of this range over here. If we pull back further, I think maybe we could see close to $34, which was a psychological, which is a round number support, as well as this channel support over here as well. Then for the resistance upwards, it will continue to remain at this around the $35.80 to $36 level here that we continue to find trouble breaching for DBS. Okay, next question. I think I'll answer the one on ComfortDelGro. So ComfortDelGro hit a 52-week low last week. Any thoughts on these thoughts? Okay, from the TA perspective wise, actually looking quite bearish. So we had this for a long time. It was consolidating in this descending triangle, but we broke the support at $1.21, and then we are sitting at this trendline support over here. So the support is around 116, 117 for now. Then the bad thing is that we also broke the COVID lows over here. So that time it was around 120. So we actually made a lower low than the COVID low. So looking at the next support level, weekly chart wise, if we look back, right, I think the next level could be maybe the next significant level might be at 110 to 111, which was a previous support back over in 2012, and then resistance over in 2008. So this was a key. Can see this was a key horizontal level last time for CDG. Then the immediate resistance will likely be at this 120, 121 horizontal level that broke down off for ComfortDelGro. Hope that answers your question. The next one will be Samudera Shipping. So Samudera, recently we tested this $1.02 swing high resistance level. Currently, we are doing some sideways movement over here. So for now, I would think that the immediate support could be maybe at 98 cents level over here. So stock kind of just, we found some support over here before pushing back up. So a retest could find some support over here. The next resistance area, we do manage to break out this $1.05 level. I think we could be looking at this previous swing high back in September last year, where we hit a high of $1.12. So over here, 110 to 112, maybe over here we find the next resistance area for Samudera. Okay, then for Yangzijiang shipbuilding, currently I think we are doing some consolidation over here with this ascending triangle taking place. So, but for now, the resistance will be this 126 that we have been struggling to clear. And then there was a previous horizontal level over here at 127. So this was 127 was a point last time, a level we broke out from, and then there was a successful retest of over here as well. So 126 to 127 will be likely to be a immediate resistance for Yangzijiang. Then the support wise, if you do fall lower, I think a retest of this 114 could be a support. Then further down could be around 110 to 111, which was a swing low over here in October for Yangzijiang. So that's the immediate levels for this stock. Okay, then VC2 is Olam. So Olam recently has been trending up in this uptrend channel over here. And then we tested around 163, which is confluence of this channel resistance as well as a previous swing high resistance over here as well. So currently, I think we might see with this resistance and the high volume generated over here, maybe we could be seeing some sideways action for now. Maybe some consolidation before whether we're able to break out of this resistance zone. Then if we do pull back wise, I think the immediate support could be at maybe 150 level, which is confirmed with this horizontal resistance level that we broke out of, and then you'll be in touch with this channel support again for Olam. Okay, next one, Manulife US. Okay, for Manulife, we're still in trading in a downtrend channel for now. So I think for short-term resistance wise, we are seeing it around 29 cents over here. I think 2 weeks back. Then I think the 31 cents level is also a resistance, as it was a prior swing low over here that broke down off. And yeah, so this for Manulife. The next support downwards, if you do make a lower low, I think will be judged based on this channel over here. So that could be around maybe the 25 cents, maybe 24 to 25 cents level over here if we are to follow the downtrend channel. This one, 303. Okay, HS Tech. Okay, this one, okay, looks like we are mostly consolidating last week. So I think that maybe this might be taking a pause for now, but overall it's still in an uptrend channel. Maybe you could expect support around the 4.3 level, which is this uptrend channel support, as well as a previous horizontal level over here that break out from. So a retest would probably find some support over here. Resistance wise, currently is at 4.6. 4.6. Then last time 4.6 over here was a previous swing high level. So we're expecting some resistance over here. But if we do break out above, right, then I think if we continue to trade in this uptrend channel, likely that maybe next time we can hit 5, which is confirmed with this previous swing high over here for HST. Okay, then the next one is 10 cent. So 10 cent still looking very bullish over here. So we have this like uptrend support line that's holding it for now. So it's just following it very nicely. We also cleared a previous level over here at 363 was a prior support level over here that broke down off. So I think moving forward, the next level we could be looking at is around the 400 level. So continue to trend up. So 400 will be a retest of swing highs in June last year, and it looks like every time we hit around here, there's some key resistance. So it's it will be the next key resistance to take note for Tencent, as well as it's also a psychological level. Yeah. So that's for Tencent. Immediate support likely to be around 360, which is this horizontal level we broke off and did a successful retest over here. And it will match with this trendline support. Okay, JD, the next one. JD also trending nicely in the uptrend channel. Currently finding some resistance at the 255 level over here. So over here was a previous swing high resistance. Currently we are seeing some retracement move or consolidation taking place. For now, I expect short term the support to be at 240, which is this horizontal level that we cut off. So we might be doing some range over here. Then if we do retest the channel support wise, maybe it'll come back to maybe 235 if we come back over this portion. Resistance wise, the next one likely to hit maybe 275, which is this swing high levels over here in May and June last year. Okay, then Ping An Insurance. This one also trending nicely. We also cleared horizontal level at 60 over here. So I think the next resistance level you could be looking at is close to 64 to 65, this swing high in February last year. And immediate support wise likely to be at this 60 area over here. But if we pull back further, I think we can look at this trend line over here for some support. Yeah, so maybe around 57 also possible if we do a deeper pullback. Okay, let's see what the other TA questions. Okay, SIA. Okay, so SIA has been on a tear recently, last Friday and today. So the good thing was that we cleared the 587 level, which was a previous consolidation support over here in February 2020. So I think the next horizontal resistance we could be looking at is close above the $6 level. About 606 was a swing high last time, and over here you can see it's a horizontal level in June 2019. So there's quite a good chance that the bullish momentum continues and we do hit this next resistance level. Then short-term support wise will be around this 587 level. If you go down further, then it will be the close to 560s to 570 level that we broke out of over here. Okay, then SIA Engineering. SIA Engineering also trending nicely upwards. Okay. For now, if it follows this trend line, then short term maybe you're finding some resistance at 248. But overall we're still trending nicely, but in maybe a wedge pattern over here. So short term support maybe around 240s over here. Yeah. So hopefully we can maybe break out this wedge, then the next resistance zone will probably be around this 253 horizontal level over here for SI Engineering if we are able to clear 248. Okay, then sets. Okay, sets also interesting. So so starting to turn bullish of late. So that time after this triangle breakout over here, right? Then we did a retest. So it was a good one because previous resistance level area over here turned to support. And then on Friday, we closed at this downtrend resistance line over here. Then we had a breakout today. Looking at the Bollinger Bands wise, right? We are seeing an expansion of the band after a contraction over here. So this could be a good signal that maybe we can expect some follow through of the bullish momentum to possibly retest this swing high at 305 over here. Since that last time when there was the band actually contracted over here and follow through, we had expansion and the price actually went up for a while. So we could be seeing something similar taking place over here for sets. So the resistance 305 over here, then last time 313 to 315 over here was also some resistance. Immediate support likely to be at these two, close to the 289, 290 horizontal zone over here that we broke out of for sets. Okay, then next one is golden agri. So golden agri actually not looking very good because this big overall uptrend formed since mid 2021 has been actually broken for a while, and we are staying underneath it. So that's a bearish sign. So I think if we break below this 245 consolidation support level, right, we could be looking at about maybe 235, 230s to 235, which is the next swing low level. And for now, looks like 260 is the resistance over here, and it was 260 to 265 was a prior support over here that we broke down off as well. So short term wise, I think for golden agri is quite a little bearish since we are trending downwards, and I'm able to go up to this uptrend channel again. Okay, next one is iFast. Okay, so for iFast, I think short term wise, turning a little bearish because we actually consolidated in this ascending triangle pattern over here, but we're unable to clear the 615 resistance after a few tries. And then we also broke below this uptrend line support over here today. So we could be seeing some pullback actually taking place for iFast. So the next, I think we might be able to find some support near the 520 area. So this was actually a short-term pause before the rally. So a retest will maybe find some support over here. And when look back around the 520 area last time, this was a previous support over here as well for iFast. So might find some support over here. Short-term resistance wise will be around this 590 level over here for iFast. Okay, next one is China aviation oil. On China aviation, very bullish. So we look at the long-term perspective, right? Actually, there's this trend line that's spanning back since 2017 over here, this downtrend resistance line. And then we actually broke. The thing was that we actually broke above it on 5th Jan, positive retest, and then we actually bounced up further. And we are currently in this trend channel over here. So that's actually bullish sign. Short-term resistance maybe at 106 if we are following this channel, and 106. Yeah. Then but if you clear 106, I think the next level last time was the next horizontal level would be closer to about 110 over here for China aviation. Then short-term support wise would be around the psychological level of $1 over here, and retest of the channel support for this stock. So short-term wise still looking all good. Singtel still trending in this downtrend channel over here. So currently we found some support at around 244, which was this swing low over here last time in November. Then we bounce back to test this downtrend channel resistance. So currently we are still finding some resistance at 250 to 253 area. I will expect probably some resistance around this stretch as well, which was a previous some support over here, then we broke down off. So a retest over here to about 252 to about 255 region over here will probably find some resistance. Short-term support will be probably a retest of these 244 lows. Then if you pull back deeper wise, you can actually retest this green color support zone around the 230s to 230s level over here. If should we continue to follow in this downtrend channel? Okay, Capital DC. Capital DC, I would say probably consolidation for now. So that time, we broke down all these ascending triangle pattern over here. Then we found support at the 175 level here. Currently, we retested 190 today. Okay, but it looks like we are still unable to clear the resistance for now. So I would expect maybe some continued consolidation phase over here. Then if you do clear in the event we clear 190, right, I think the next horizontal level to look at will be around 198, which is this swing highs over here. Then followed by around 202 over here, which is another horizontal level for Capital DC. Okay, then DG Core read, overall still bearish as we actually broke down the ascending triangle over here. Then we looks like we did a retest close to the lows over here around the 50-cent mark and did a bounce back over here to 59 cents. But probably I would think maybe some sideways consolidation over here. Looks like not much direction heading for the stock for now. Yeah, and the volume has also decreased quite a bit after since this high volume part over here. So that's for DigiCore. The next one, Thai beverage. And Thai beverage, currently still trading in the uptrend, in an uptrend channel over here. But looks like we are finding some short-term resistance around the 72 cents level over here. So this was a previous swing high resistance in November 2021. Then we also saw a high volume over here, but price has been somewhat sideways. So we are finding some resistance at this level. Short-term support wise, I would think maybe around the 70 cents price horizontal psychological price level. If we pull back further than that, maybe we could do a retest at 68.5 cents, which was a horizontal resistance that we broke out of over here, and the previous sideways consolidation over here as well. Okay, Uni Asia. Uni Asia actually, I think from the big picture wise, is a downtrend. But short term wise, looks like we consolidated for a long time over here with the support at around the 79 cents level and the resistance at 84 cents over here. So it's a big range, and today we actually broke out this range. So I think we could be seeing maybe there might be a chance of some follow through bullish action. Then maybe let's see the next resistance level. The first one could be at 89 cents, which is this previous swing low level. Then followed by maybe 92.5 cents to 93 cents level, which was a horizontal support over here last time. So maybe if the breakout is successful, we could be looking at these resistances upwards for Uni Asia. Alibaba Hong Kong. Okay, for Alibaba, still trending nicely. So short-term wise, finding some pause at 114, 115. Okay, but still looking good to probably hit the next target around the key resistance zone at this 118 to 122 level. So over here, since February last year, March and June over here, we see that key resistance taking place for Alibaba at this zone. So this is the key resistance zone to take note of. Short-term support wise, I think will be around 10. If you do pull back, could be near the 106 level, horizontal level over here, we broke out of, and probably the consolidation support over here also. So that's for Alibaba. Sheng Siong. Sheng Siong, overall wise is a gentle uptrend. So the key resistance is at 167, 168, which was a previous high in August 2020. And it's also a level over here that we have tested multiple times, but failed to break out of it. But the support the key support continues to be this key trend line over here that has been holding it since January of last year. So for now, it's a gentle uptrend. I would expect short-term support to be maybe around the 163, 164 level over here. Yeah. So let's see whether in future we could actually get a breakout for Sheng Siong over here. Okay, the next one is SEM Industries. So Semco Industries, I think still trending up in this nice uptrend channel over here. I expect some resistance near the 350 level, which was the high of last year over here. And meanwhile, the support wise could be around the 334 level over here, which was this horizontal level that we're holding it. So for now, it's like doing a range trading for now. Yeah. So this for SEM Industries. Okay, then venture. Venture actually quite bullish. So ever since we broke out of this downtrend line over here at around the $17 mark, we actually hit the high of 1790. So we came back to this key neckline resistance over here. So for me personally, I think it's some bullish signs as we are coming back to this uptrend channel over here. And then the second thing is that we could be forming an inverted bullish head and shoulders pattern over here. So we could be looking at there's a possible chance we do actually break out of this 1790 level for further upside, where the next immediate target could be around the 1840 level, which was a swing high in August of last year. This will venture. Okay, then Jardine. Jardine still being kept in the downtrend channel over here. So for now, I expect resistance to be around the $28 mark, which is this channel resistance. Going higher would be around this 2880, 2890 resistance over here. Support wise, probably around 2740 to about 2770, this consolidation range over here for Jardine. So currently it looks like a lot of sideways movement in this downtrend channel over here taking place. In Wilmar also like currently like consolidating over here with this ascending triangle pattern over here. So looks like still can't find a clear direction of where it's gonna hit to next. But the thing is that for resistance wise, we are in this zone. So if we break out the 420 level, I think another resistance is at 427 over here last time. And we could be finding resistance at also this from the big picture wise, there's also this large long-term downtrend resistance line since 2021 over here. So maybe 430s over here, there's also could be some resistance expected for Wilmar. Then short-term support wise would be this around over here, near the 410 level over here, we're finding some support over here. Capital Corp, currently like we are pulling back. Short-term wise a bit bearish because ever since we hit this 750 double top over here, we have been pulling back and we are outside of this uptrend channel support level over here. So for now, the short-term support is near the close to the 715 horizontal level over here. But I think if we pull back further wise, could be looking at the next level, 61.8% retracement near to the $7 mark. And then further wise, I think we could use this trend line over here as a support gauge. So might do a retest over here of this support. If it pulls back further, maybe the 680s mark over here. Okay. So this for capital. D01, okay, DFI. So DFI, quite a good chart over here. So this key stubborn resistance around the $3 mark has actually been broken, hit a high of about 320 before we doing some, looks like a retest over here. So if we hold above these 290s to $3 level, right, I would expect possibly we could see this uptrend momentum continue to retest the next targets around maybe 327, then followed by 350 over here. So we're looking at some horizontal levels in 2021 for DFI. Java. So Java, I think we found that time we found some support around the 31 cents level after the news, which was a previous horizontal level as well last time. So it was a support back in March 2020 and January 2016. So looks like we are currently doing a retest of this level. Then short-term wise, we are finding some resistance at the 35 cents level over here. So I think if you do a retest and this holds, and maybe we might be seeing a range. But if it doesn't hold, let me see what's the next horizontal level we could be looking at. So based on the past, the next level could be maybe at the 30 cents level over here, then followed by maybe 20.5 cents over here. So this for Java. Here on HSI. Okay, HSI, I think is at we might be seeing some short-term resistance area. So we have this downtrend resistance line since February 2021. We actually retested it over here. And then there's also this rising wedge pattern over here. So short-term wise, there might be some resistance near the 22,000 level. But if we continue to push through wise, I think the next key level will be the 22.4K level, which we see there's this key horizontal level, which was a resistance in March to June of last year. So this for HSI. Then currently, if we get a pullback, some support will be this swing low around the 21.2K level. Then if you pull back further down to this wedge support wise, I think we could be looking maybe close to a 21K level over here. So this for HSI. Then HST. Okay, this looks like we are finding some resistance over here at the 75 cents level. So this was a previous resistance in August last year. Then we are doing we reach this level, we are doing some sideways movement for now. So the support is around the 73 cents level for now. If we break through, I think the next resistance will be around the 80 cents mark. Key round number as well as previous horizontal resistance July last year. Okay, then short-term support wise, I think maybe we could be finding it at around this trendline support if we do a deeper pullback for HST. Okay, then best work. So best work actually still looking good. So after it broke out 183, this range over here hit a high of 207. So that time I think did Fibonacci over here around confluent with this 205 resistance of 61% retracement over here. So currently I think we're just doing some sideways consolidation for now, probably even the strong run over here. So short-term support wise, maybe around 193 level could be a support that holds best work. This is the level we broke out of and did a retest and a bounce. So 193 then followed by probably 189 then 183 is for best work. Maple Tree Pen Asia. Okay, so this one actually had a report on it. So I would say it's quite bullish given that we had this cup and handle pattern over here. We had a breakout over here around the 167 level. For now, it's still trending upwards. So short-term resistance wise, we will be seeing around 178 to 179, which is this horizontal level over here for now. Yeah, so we are near the short-term resistance over here for now. Then support-wise, I think we could be looking at around short-term wise, if we pull back a little, maybe 172, 173 might see some support over here. Yeah. And First Resources. Okay, First Resources currently still in this downtrend formation. So we are still kept within, I think we are still kept within this channel over here. So for now, I think some short-term support wise could be near 135 if you do a retest for First Resources. Then resistance wise will be around 145. So this was a swing low support over here. We broke down and we did a retest. And then we also have this trendline resistance acting on First Resources over here. So that's something to take note of. ISDN. The ISDN has been very strong. So uptrend, there was an uptrend channel and we broke through over it. So I think currently this 57 cents level could be a short-term resistance. So previously was a swing low support level in October 2021. Then it's a swing high resistance in May 2022. So this was key. This was a horizontal level. Then share price, we saw the price actually tested this level today. So let's see how it closes. And if we do get a pullback, I think the 52.5 cents level would be a good support, given that it was a previous swing low support in May last year, some resistance in July last year, and then it was a consolidation over here before it break out over here. So this for ISDN. Seven Go USD. Oh. Okay, I think gold has been on an uptrend over here. So let me see there. The next level could be, we're testing this previous support. We're testing this previous support that we broke down off at around 179 over here. So today we are around here, so we might face some short-term resistance over here. But if you do breakthrough wise, I think the next key level could be around 186 over here, the next horizontal level. Then for now, short-term support wise, could be around the 174 level, which was a horizontal resistance in June of last year, and we could be doing a small pullback over here if it does retrace. Overall, gold has been a nice uptrend over here. Yeah. And if you look at the actual gold self-wise, we also broke above this rising wedge, break out of this rising wedge over here. So bullish signs, we also cleared 1910 previous horizontal support, and then next level could be around 1960. So 1960 will be around this level over here for gold. Okay, Hong Kong exchange. Okay, Hong Kong exchange also trending up. Okay, let me just draw the lines. So it's been in this nice uptrend channel over here. With short-term wise, we are seeing some resistance at 376, looks like, which is around 378 around here, which was a level over here last time. But the next level to note be around between 393 to about 400 over here, I think. So if we do continue to trend upwards, might be seeing some above the 400 as another resistance level. Then short-term support wise would be this 350 horizontal level over here that we broke out of, and possibly retest of this channel support over here for Hong Kong exchange. Okay, so I think for now I'll hand over my time to my colleagues to answer the other questions.
Yeah, thanks, Zain. So I think there's one on the banks. I'll answer that. Seems OCBC is doing a catch up with the two local banks. What time frame in Q3 or by Q4 will hit a TP? So our TP is usually a year. However, having said that, we will also update and refresh our TP based on the results that have been released, as well as certain macro factors as well. So do keep a watch out for the reports that will be coming out on not just OCBC but all the other stock counters as well. Okay, I'll hand it over to the rest of my colleagues.
Thanks, Ken. So I'll take this question. Why good valuations TP is lower than current price, and suggestion is to accumulate for Meta. So we had a TP of a target price of $113 US. The stock last closed at $132. And this accumulate rating was done after their third quarter earnings call in I believe late October. Stock price back then was about $90 to $95. And then quite soon after, we saw a really big spike in a big spike of like 22 to 25% in their share price. And this was surrounding the news that Meta would be laying off about 11,000 workers. So I guess we haven't actually updated since the announcement to factor in. You would think that the expenses for this year and the following year would decrease quite significantly, especially as they begin to they begin on their job cuts and their more prudent spending habits. When it comes to valuation, right now it is relatively low compared to the past. So it's 10 times, right, versus the average of 32 times. But if you think about it, back then when Meta was trading a lot higher and closer to 30, they were also growing a lot faster, like 20 plus, 30 plus %. And I guess for Meta, at least in the near future, we don't think that the growth will be as robust as it was in the past. So definitely investors will be less willing to pay, closer to 25, 30 times for a company that doesn't grow as fast as it used to. So when you look at valuations, yes, it's low relative to its past. And obviously for if you look at the long run, something that trades at 10 times P, it's fairly attractive, which is why we actually mentioned the valuations in the presentation, because it's pretty low right now. Yeah, but in terms of our TV, because it's a 1-year target price, and considering the weak macro environment and a lot of the short-term headwinds that companies facing, that was our target price at the time. But following the fourth quarter earnings that's supposed to be coming out towards the end of this month, we will obviously take a look at it again, revise it accordingly. Yeah, that's all. Thank you.
Okay, I think that's all the questions we have. I see 3 other questions, I think regarding Uni Asia, ComfortDelGro, as well as SETS. So these are, I think Terence, as I mentioned earlier, Terence and Paul are unable to join us today because they are on a business trip. So do scan the QR code on the screen here and join our committee group in our Poems Mobile 3 app, and do post your questions there, and we will definitely get back to you as soon as possible. Anyway, next week there will be no webinar in the morning due to Chinese New Year. So to those who will be continuing with the webinar the following week. So for those who are celebrating Chinese New Year, Happy New Year to you and have a good week ahead. I think we'll end the webinar here. Okay, thanks everyone for joining us today.